And right now in the United States, something is happening inside the Department of Labor that could quietly change what millions of Americans are allowed to hold in their retirement accounts, including Bitcoin. And the key word here is quietly because this isn't a flashy headline policy. It's a structural change to how investment decisions are judged. You see, through its Employee Benefits Security Administration, the Labor Department has introduced a proposal that expands what can be included in 401k plans, moving beyond the usual mix of stocks and bonds into alternative assets like private equity, real estate, and digital assets such as Bitcoin. Now, under the proposal, fiduciaries, the people responsible for managing these retirement plans, would no longer be judged based on whether an investment performs well or poorly, but on whether they followed a sound, well-documented process when deciding to include it. So instead of asking, did this investment make money, the standard now becomes, did you do your homework before making the decision? That includes evaluating fees, liquidity, valuations, long-term performance, and making sure all of it's clearly documented. Now, if that process is followed, fiduciaries are protected. And that is a very big shift from where things stood just a couple of years ago. You see, back in 2022, regulators were essentially telling fiduciaries to use extreme care when it came to crypto, which in practice meant most of them avoided it entirely because the legal risk just wasn't worth it. Now, that pressure is being lifted. Deputy Labor Secretary Keith Sunderland made that very explicit, saying the department is no longer in the business of picking winners and losers. And that line matters because it signals a philosophical change, not an endorsement of Bitcoin, but a removal of the barriers that kept it out. This proposal doesn't force anyone to allocate to Bitcoin, and it doesn't guarantee that every retirement plan will suddenly include it. What it does is open the door. Once fiduciaries have legal clarity, asset managers can begin building products that include Bitcoin exposure alongside other alternatives, and then offer those products within retirement plans. And the scale here is hard to overstate. There are over 90 million Americans with 401k accounts, representing trillions of dollars in long-term capital. So even small allocation changes, 1%, 2%, start to become very meaningful very quickly. Senator Cynthia Lummis posted her support on X, saying this landmark rule tears down bureaucratic barriers by putting digital assets on equal footing with every other asset class. Hardworking Americans can finally build real wealth in their retirement accounts. Now, let's zoom out for a second, because this isn't happening in isolation. The proposal was coordinated with both Securities and Exchange Commission and the Treasury Department, which suggests that this is part of a broader effort to modernize how retirement capital is managed in a financial system that looks very different than it did even 10 years ago. Labor Secretary Lori Chavez DeRemer said the goal is to align retirement investing with modern markets, adding that greater diversification could drive innovation and benefit workers and retirees over time. And this is where it starts to connect the bigger picture. You see, 401ks are not fast-moving capital. They're steady, recurring inflows tied to paychecks, contributions, and default allocations that happen automatically over years, sometimes decades. So if Bitcoin begins to enter that system, even a relatively small percentage worth, it introduces a new kind of demand, one that isn't speculative, isn't reactive, and doesn't disappear overnight. It's slow, consistent, and structural. And that's the kind of shift that doesn't make noise at first, but over time can completely change how capital flows through a market. When I look at this, it doesn't actually force Bitcoin into 401ks. It just removes the legal fear around it. And it feels like that might be a bigger unblock here. So Sanjay, what are you making of this story? How are you seeing it? I'd love to get your initial beat.
Yeah, I love it. I've been in Bitcoin now almost more than 14 years, and I've noticed that the folks in my life who have benefited the most uh, from Bitcoin are those who DCA in and forget about it. And it
Yep.
seems like the 401k is the perfect vehicle for that, right? Just every month, every couple of weeks, whenever you get paid, a little bit goes in. And people don't trade in their 401ks. People rarely check their 401ks compared to other investment accounts, compared to like your Robinhood app.
True.
And as they say, time in the market. If you can resist the urge to trade Bitcoin, there's really no way to go wrong. So yeah, big believer, big fan.
Yeah, I mean, absolutely, because we have this fear being gone from, these managers, and you're suddenly talking about over 90 million Americans and potentially trillions of dollars that could at least in theory, start getting exposure to Bitcoin. So, Chase, how big of a shift is that in reality? Because this is one of those stories that I feel like is kind of flying under the radar, but the implications for Bitcoin moving forward could be enormous, right?
Sorry about that. I think it all comes back to career risk, right? So at my previous company, Acropolis, we dealt with pension funds, family offices, all types of different capital pools. And even if you're talking to somebody on the other side of the phone that owns Bitcoin in their personal investment capacity, there is career risk to allocating other clients' funds to Bitcoin on their behalf. Because if you just buy the S&P 500, you may outperform inflation, you may not, but you're not going to get fired. You're not going to take personal risk that you lose your source of income and your job for making that decision. And so I think the more that we can do to educate folks first on Bitcoin, the asset class, and why it's been the best performing asset for 10 of the last 16 years, that's step one. Step two is to then remove the career risk that allows them to allocate on behalf of their clients. And so that's what this represents to me. That's why it's a huge deal. I think it's also the right type of capital to enter Bitcoin. And the way I look at that is also similar to Savannah's 5-year term. Duration matters with Bitcoin. In the near term, it can go anywhere. But if you're going to hold for 5 years, or in the case of a 401k or pension funds, retirement accounts, even longer time horizons, you've really de-risked the asset class. And it also comes back to this idea of position sizing. A lot of people say Bitcoin is too risky. It could go to zero. It's too volatile. Well, all that means is that you need to properly position size the investment. And if the folks who have learned about Bitcoin, believe in Bitcoin, and now no longer have career risk, have the freedom to position size correctly on behalf of their clients, I do think that we're going to see trillions of dollars of new capital flow into the asset.
Yeah, I think so too, Chase. I mean, you kind of nailed it. We're seeing this big shift from, fiduciaries kind of having their mindset go from don't lose money to just proving they did their homework on the investment. So that certainly would give us a lot of confidence that we'll see them start investing into the Bitcoin space. And what I found particularly interesting here, guys, is, you two are kind of coming at this from a completely different angle, right? You're unlocking home equity into Bitcoin. And now we see we've got retirement accounts potentially opening up to Bitcoin too. So my question for you, Sanjay, is does it feel like multiple gates are starting to open at the same time here? Like, is this one of these inflection points we're going to be looking back on years from now and being like, this was one of those flips really got switched? Where do you make that we are right now in this Bitcoin ecosystem with products like your own and, Bitcoin making its way into 401ks? Is this a big moment for us right here?
I think it is. I think we've seen this happening now over the last few years. I think the biggest step function like that was about 2 years ago when the ETFs happened. And so, the more that Bitcoin is embedded into the traditional financial system, I know they can sound, you know, scary to some Bitcoiners, but it's actually should be the goal. We want Bitcoin to be embedded everywhere, and we
Mhm.
want as many avenues. I like to say there's no wrong pathway to Bitcoin. So absolutely great to see Bitcoin sort of more and more in the mainstream.
Yeah, no, it certainly seems that way. And guys, if we zoom out on everything we're seeing right now, retirement capital, real estate equity, all these traditionally locked up pools of money, are we starting to move toward a world where Bitcoin exposure just becomes part of a normal part of how people allocate capital, whether they realize it or not? Chase, I would love to get your thoughts on that because that kind of feels like where we're starting to move toward.
Well, I mean, if you look at one way of answering that question is to look at some of the Bitcoin companies or Bitcoin holding companies in their treasury that are joining the S&P 500. That is kind of an
Mhm.
instant change where now the millions of people who own or are DCAing into the S&P 500 as their kind of savings account now have some Bitcoin exposure. And I think the people on this call would say, well, out of the 500 names in the S&P 500, we probably have the fewest ever going forward. Now is the fewest ever companies that hold Bitcoin on their balance sheet. You can imagine that 20 years from now, maybe 200 of the 500 have some amount of Bitcoin on their balance sheet. And therefore, the people who are just passively buying the S&P 500 now have some Bitcoin exposure and a better chance of outpacing inflation and having savings that are there when they need them for retirement or major life purchases. So that's just one example of how folks who don't need to know and don't care to know anything about Bitcoin are kind of indirectly or passively getting Bitcoin exposure. But I do think that there's other things like STRC, which is tapping the fixed income market for people who basically just need to know enough about Bitcoin to believe that the dividend will keep coming and no more. And so there's a lot of vehicles that I think, and products and opportunities, and Savannah represents one of those in the home equity space, that is meeting people where they're at and basically saying, whether you're a Bitcoiner or whether you want, Bitcoin appreciation, but none of the downside risk, we can create a product. We can take on that volatility risk and we can kind of smooth out the returns for you in a more predictable way that you're comfortable with.